Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. SoftBank CEO Masayoshi Son, in a meeting with portfolio founders, champions AI as the key to future success. Ola's Bhavish Agarwal called it an energizing discussion on AI, AGI and India. One founder described the session as forward-looking and India-focused. Sources say Son is set to meet Prime Minister Modi during his visit.
ChatGPT owner OpenAI is allowing its employees to sell roughly $1.5 billion worth of shares in a new tender offer to Japan's SoftBank Group, as per Reuters. SoftBank CEO Masayoshi Son has been persistent in seeking a larger stake in the startup after investing in the last funding round, according to CNBC, which first reported the news.
Logistics startup Shadowfax picks JM Financial, Morgan Stanley and ICICI Securities as the lead bankers for its upcoming initial public offering, expected to launch in the second half of 2025. Money Control reported the firm is likely to raise between 2,000 to 3,000 crore rupees in the public issue, the report said.
Australian Parliament's lower house passes a bill banning social media for teens under the age of 16. If turned into law, social media platforms would be forced to tighten age verification process and also face a fine up to $32 million for certain systemic breaches. Google and Meta have urged the Australian government to delay the ban.
Members-only platform Ladies Who Lead raises $1 million in a pre-Series A funding round led by Rainmatter Nitin Kamat's impact-driven investment firm. The round also includes participation from the family office of Jayant Davar. The startup will use the funds to expand to new cities.
Those were the headlines that we're tracking for you this evening. But on what's brewing, audio series startup Pocket FM saw consolidated revenues of 1,051 crore rupees for FY24, registering a growth of 6x from 176 crore rupees in the previous financial year. Meanwhile, its losses reduced to 165 crore rupees during the period versus 208 crore rupees in FY23. The firm's expense to earnings ratio improved to 1.16 in FY24, down from 2.18 in the previous year. This essentially means Pocket FM spent 1.16 rupees for every rupee earned in FY24, compared to 2.18 rupees for every rupee earned in FY23. Joining me now to discuss this further is Rohan Nayak, the co-founder and CEO of Pocket FM, and also with me, my colleague Shruti. Rohan, thank you so much for taking time out and being here with us on Startup Street. You know, as I just pointed out, in 2024, you've seen your global revenues come in at 1,051 crore rupees, which is a 496% increase from the 176 crore rupees you saw in FY23. Can you take us through what led to this big growth? What did you do different this year?
Thanks for having me. We've seen audio series establish itself as a new entertainment category this year. I mean, when we started in 2018, the hypothesis always has been that, there's been no entertainment category for audio, while video has seen multiple sort of entertainment formats from short form to long form. What we believe is that audio series is the next big entertainment form, in addition to movies and TV shows. And that's what we see in 2024. We saw more and more users move to audio series as a 24/7 entertainment format. We are seeing users binge over 120 minutes every day. That's 2 hours of engagement every day. And in 2024, we saw 100 billion minutes being streamed. In our 200 million listener community. And interestingly, we also, in addition to a deep engagement that we see on the platform today, we're also now seeing users willing to pay for high quality content. With our microtransaction-led model, we saw more than 45 million transactions happen this year.
All right, Rohan, this is Shruti quickly stepping in. You've also cut your losses by 21% from 208 crore rupees to 165 crore rupees. However, profitability is still a bit away. But by when do you hope to turn profitable, and what do you believe will lead to this growth?
You've seen that we've scaled 5x in revenue, and our EBITDA margins have actually improved quite a bit. So we have always believed in sustainable growth. In fact, we have the highest gross margins for any entertainment business. We have more than 65% of gross margin, which is amongst the highest in our sort of industry. And we have one of the highest ROIs of our content investment spends. So I feel even today at an operating level, our core markets, which is India and US, are actually operationally profitable, while our new markets, which have recently launched, like Europe, are yet to turn profitable. So profitability is more of a choice right now, rather than an inevitability. It's more of the fact that we're already profitable in our core markets at an operating level.
So profitability right now is a choice, is what you're saying. But, let's take a look at your content then. Over 30 audio series have achieved revenue milestones of 10 crore rupees, of which 7 have crossed 100 crore rupees, right? So if you could take us through what you have in store on the content front for the coming year, and what's the kind of role AI will play in your next leg of growth?
Yeah, so at a very fundamental level, we're in the business of finding these unique and unheard stories from all around the world. And as we have as we have pioneered this new category of audio series, the biggest challenge always has been, how do you get high quality content on the platform? Today we have over 75,000 audio series on the platform, and the plan is to grow this multifold over the next year. We today have a writer community of 250,000 writers. I still feel in the early stages of building this content catalog, because users still need high quality content in a lot of diverse genres. So next year we're going to see new genres coming up, like fantasy and science fiction, and we're going to invest more in those specific genres, which have actually tried shaping up really well. In AI, by the way, out of 75,000 audio series, 40,000 of these audio series are enabled by AI. And what it means is that through AI, we're actually enabling writers to share their stories through AI voice, right? I mean, we have so many writers who have great stories to share, but how would they? How would they create an audio show? So through AI voice, we're enabling that to happen.
All right. So you just spoke about your product innovation and expansion plans. Let's go to the geographical expansion plans. You continue to expand with strongholds in markets like the US, where you've got about 70%, and India revenues make about 15%. And you've made recent forays into Europe and Latin America as well. Rohan, take us through your expansion plans. How are the new markets faring? What kind of subscription numbers are you seeing there?
It's still very early, but Europe is going to be the next big bet for 2025. We are seeing very early numbers. We're seeing great numbers in UK, Germany, and I think we're going to expand to France and Italy over the next quarter. We're still very early, but we're seeing really positive signs, and Europe is going to be the next big bet for the next year.
Your next big bet for the next year. But we have to ask you, right? You've had 2 series of layoffs. A month ago, you laid off people in a bid to optimize costs. Can you tell us, are you looking to undertake more restructuring? Will there be more layoffs at Pocket FM?
We have actually, our full-time headcount at Pocket FM has been steady. Like any entertainment business, you start a lot of shows, you start a lot of projects with freelancers and consultants for a short-term basis. And if these projects after review don't go ahead, you don't extend those contracts. I think that's what you're referring to. But at a full-time sort of employee level, we've had a pretty steady headcount, to be honest.
All right. Okay. On that note, Rohan, we'll have to wrap up our conversation. Wish you the very best, and many thanks for joining us on Startup Street today. Thank you. Thanks for having me. All right. Moving on, service resolution intelligence firm Neuron7.ai recently raised $44 million in its Series B funding, led by Smith Point Capital, the firm founded by former Salesforce co-CEO Keith Block. Now, existing investors, Nexus Venture Partners and Battery Ventures joined the oversubscribed funding round, bringing the total capital raised to date to more than $63 million. And to talk to us about the future roadmap at Neuron7.ai, joining me now is its co-founder and CEO, Nikhil Patel. Nikhil, welcome to Startup Street. You help enterprises resolve complex service issues with artificial intelligence. Take us through your business model, your offerings, and the kind of efficiency you've brought to your clients in terms of time and money.
Sure. First of all, Shruti, thank you for having me on the show. Neuron 7, we have been focused on kind of going into more and more complex software companies. If you think about it, products around you have more software, they have more networking, and things are getting, whether it's in the house or in business, more and more complex. So where Neuron 7 comes in is for complex products like CT scanners and MRI machines in hospitals, for network switches in data centers, where uptime is super critical. We bring in AI and we bring in our service resolution tool to solve issues faster, but across simple and complex issues. Doesn't matter to us. The issue that most of these manufacturers have is they have thousands of products, and a human mind, especially when they're servicing these products, cannot be an expert in 1,000 products.
Sure.
If you're super high IQ, maybe you know 50 or 60 of them very, very well. Now take 50 issues and resolutions that are needed in these 1,000 products, you're at 50,000 issues and malfunctions, right? And you're sitting in front of a CT scanner that is down where people are waiting for scans and so on and so forth. What Neuron7 does is for every single one of those 50,000 issues, we will tell you the turn-by-turn directions, almost like a Google Maps on exactly how to solve issues. So you can say for product model 700, issue number 43,300, and Neuron7 in 3 seconds will tell you, here are the 7 steps taken the last 100 times we saw this issue. And it does not matter whether this issue was solved in Japan, Germany, in your Jira tickets and manuals.
So Nitin, can you give us a percentage of the efficiency that you bring in?
Yeah. So if I take some of the examples from our customers, the world's largest manufacturer of ATMs has seen a 10% reduction on revisits, or what's called first-time fix. Optical network switch companies like Ciena has seen 46% faster resolutions. So we bring in companies. One of the largest med device company has, whenever they use Neuron7, they use almost $6,000 less in parts than when Neuron7 is not used. So apart from the efficiency on resolutions, there is one more thing that we bring to the table that is very, very, that's kind of an urgent and important problem, and that's expert knowledge capture. So in the US, Europe, India, everywhere, people are leaving the workforce, the older folks, by the droves. And we are able to capture exactly how thousands of these people have solved issues the last 10, 20 years. And that expertise is captured before they leave the company. Which is a huge benefit.
Okay, Nitin, very quickly, if you could answer this. In the last 12 months, you've increased your annual recurring revenue by 300%. Have you been able to do that? And what is the current top line looking like?
So the current top line, again, is going to double at least again this year. Again, 85% of our revenues come from Fortune 1000 companies. And we're going to go triple the user base of our existing customers. I think the big thing that we are focused on is how do we get more and more companies within a particular industry to realize that something like resolution intelligence exists today. We are in a world where this is possible. This can be deployed within your Salesforce and ServiceNow environments, and that is our focus. We want to double the number of logos in each of these industries.
Okay, let's quickly talk about your latest funding round. The $44 million raised, I believe, will help accelerate Neuron7's product innovation and enterprise-focused go-to-market growth initiatives. Nitin, elaborate on what these new innovations and initiatives are, and what's in the pipeline.
Yeah, I think the two things that we're going to focus on significantly, sniper-like, is going to be product innovation. We have an entire roadmap. We have an amazing customer advisory board. And we want to go into very high value add predictions for these manufacturers of ATM machines or high-tech industrial equipment and med device and so on and so forth, and get into sectors like telecom and managed services by deploying not just resolution intelligence, but getting into the predictive space, the next likely error, intelligent pathways, predictive maintenance. So things that are very valuable to the humans at the front line, servicing the products, and for the executives and engineering and service at these companies, we are going to deploy more and more products that add value by increasing the accuracy of our predictions.
Okay, before I let you go, Nitin, let's quickly talk about India operations. You plan to grow 10x in 2024. What makes you bullish? What is the growth plan? How many people are you looking to recruit?
Yeah, India is a significantly important market. Managed services, there's a lot of companies that service telecom, data centers, and so on and so forth. They are ripe for the innovation we bring to the table. There's a lot of those companies in India. There's a lot of multinational companies that already have deployed our product in the Indian market, right? So in Europe, US, a multinational company kind of deploys it every single country. And we feel like we can easily double or triple the number of net new companies that we work with today, and get the impact going on the people using our predictions. But more importantly, we also have always leveraged the talent pool in India from an AI perspective, whether it's from the IITs or experienced folks. And we feel like we're going to double the number of experienced folks and then double down on recruiting from these universities that have yielded great results for us. And we've been able to build products for the last 5 years with the talent out here. So India is a hugely important market and an employee base for us.
All right, Nikhil, we're pressed for time and wish you the very best with all your plans. Thank you so much for joining us on Startup Street today.
Thank you so much for having me.
On that note, it is time for us to head into a short break. But coming up next, SuperYou is all about protein, but in a delicious, tasty chocolate wafer. We bring you more about the startup on the other side. Stay tuned.
Welcome back to Startup Street. SuperYou has come up with an innovative concept of a protein-rich chocolate wafer. The brand aims to provide consumers with a nutritious snacking experience. Shilpa Ranipeta digs deep into the company's tasty products with co-founder Nikunj Biani. Here's a slice of that conversation.
Look, there's no real brand that talks only protein to consumer. So the goal was, can we create a brand that's synonymous with protein?
You have started the brand with Ranveer Singh, who's a very popular actor. How did that come about, and why Ranveer Singh?
Yeah, so there's a fun story to this. So we coincidentally happen to live in the same residential building, and what we have in common is the love for sports. One day while playing a game, I said, listen, you miss 100% of the shots you don't take your shot. Spoke to him, pitched the idea, and he loved it. I think he also somewhere wanted to build this whole thing out, which is an extension of his personality and what he stands for and what he believes in. And I think that's what he resonated with. Ranveer is going to be extremely hands-on. So he's a co-founder, he's not a brand ambassador or anything like that. He's been involved in, when I say everything, I mean from the first conversation around what do we want to do with this brand, to the naming, to the packaging design, to the product trials. Having said that, my role is going to be to manage the day-to-day ops, which is, let's say, everything on the sales front, working with our channel partners, ensuring just basic ops, so on and so forth. I think having Ranveer is this sort of secret weapon that we have, because what he enables for us is really massive top of funnel. And what I mean by top of funnel is awareness.
So you've just hit the markets. Tell us a little about the first product you've launched. That's a protein wafer, right? How did you come about that? And also, what are the other products that you will be launching down the line?
So what we said is, we wanted to tackle snacking first, because snacking is where you tend to just grab whatever you can first, and you don't plan snacking meals. And we said, can we create something that's going to be delicious, but also delivers on nutrition and enables protein consumption effortlessly. Within snacking, there's so much more to do. So just imagine like quick snacks but enriched with protein. So we're going to do like protein balls, we're going to do protein dry fruit snacking, and so on and so forth. The next set that we're looking at is also breakfast as a category. So let's say things like oats, granola, muesli, all of that is on the cards. And then going forward, even broader categories like, let's say, biscuits.
As a company, right, or as a brand for SuperYou, what are the kind of targets that you have, say, in terms of, the kind of business that you want to clock in, say, the next 1 year or in the next 3 years in terms of revenue and in terms of profitability?
Yeah, so, regarding that, I think we obviously take on very ambitious targets. And what we want to be able to do is create a 500 crore brand minimum in the next 5 years and do so profitably. So hopefully we can do that with a good EBITDA margin of at least 15 to 20%. As that would be the good definition of an FMCG company. So that's what's on the cards for us, and that's the goal. That's what we're working towards.
And you're entering a market, whether you're talking about protein, whether you're talking about snacking, which is highly competitive right now. Every day we see new brands emerging. We're also seeing the larger incumbent brands constantly innovating in the space. And health, well-being is, of course, the most competitive space right now in the foods category. So how are you going to, how do you see the competitive landscape, and how are you going to differentiate yourself in such a competitive space?
Yeah, so it's good you asked me that, because I actually see our competition not as existing protein brands, but more as the larger brands in the spaces of chocolates and namkeens and biscuits, right? So for example, when you're snacking, that's what you end up munching on. And for us, the goal is, can we make that munching a little bit better for you by providing you options that deliver on taste and protein, and hence making it better for you. So we're doing multiple things to differentiate. Number one being product itself. So never have you seen something that gives you the delight of chocolate in the form of wafer and giving you 10 grams of protein, right? So that's number one. Number two is we're also employing a very innovative technology to source our protein. It's known as biofermentation, very new technology, and it enables 2-3 things. So biofermentation of yeast enables protein creation, and then what we do is we use that protein powder in all of our products. So that's one of the innovations, and then we've got a few other tricks up our sleeves, which I will reveal to you once we get them out in the market.
Moving on, urban gardening startup Ugaoo has raised 47 crore rupees in a Series A funding round led by V3 Ventures. This round also saw participation from existing investors, DSG Consumer Partners and RPG Ventures. With a big bet on India's home and garden market, Ugaoo is planning to expand its production capacity to 100 acres in the next 2 years. In the last 3 years, the startup has achieved over 1 million orders with an annual recurring revenue of over 100 crore rupees. Joining me now to discuss their growth plans, the fundraise and their product portfolio is the founder, Siddhant Bhalinge. Siddhant, many thanks for joining us on Startup Street. You know, Ugaoo is essentially making home gardening easy for young urban Indians, right? Can you take us through what made you embark on this journey so many years ago? What's the opportunity you're seeing here?
So since the beginning, my family business has been a seed company, and I did my landscape architecture in the US for 5 years. So once I got back in India, I saw that there's a dearth of specialized gardening stores. So the way the gardening market is kind of, very mature and developed in the Western countries, I felt there was a gap in India, and there was a space for some brand to come in and really bridge that gap. So that's the reason I started Ugaoo back in 2015.
You know, it's been a great journey since then. Can you take us through the various services you have on offer? It's not just the plant itself, right? You also have a subscription-based model apart from, other gardening tools that you can buy from you. So what are you seeing the most demand for, and how many users have you served till date?
So right now, the online sales is the primary channel that we use. Apart from this, we have garden services, wherein, once you buy those plants, we also come in and maintain those plants. We help set up gardens, balconies, bungalows also. And apart from this, we are also available on quick commerce, on Blinkit, Zepto. Also, we have 10 stores. And right now, we are selling about 2.5 lakh plants every month. And our customer base is more than 3 million right now.
So you're also betting big on the quick commerce boom that's been there. But, you've raised a little over $5 million, right? One of the primary uses of the fund will be to expand your regional presence. How many cities are you currently present in, and how many do you hope to be in by the end of this year? And which cities are you seeing the most demand from?
Right now, we are in 5 cities, and we hope to be in another 5 more cities by the end of next financial year. The most demand usually comes from Bangalore and Bombay. We are seeing a huge uplift in demand from NCR now that, the air pollution is going up. So it depends from, season to season, but usually it's the metros that are high up there.
So metro is high up there for demand, but you have both online and offline presence, right? The target is to have 80 retail stores by FY30. How many stores do you currently have, and are you well capitalized to achieve this target? What's the offline-online mix at this point?
Well, right now we are at 10 stores, and we are going to open another 2 stores by this year end. We are planning to open 1 store every 2 months going forward, and we are seeing a huge demand from tier 2 cities as well as the other metros that we are not present in. Right now, the mix currently is 30% offline, 70% online. But in the next 3 years, we do anticipate that it will be a 50-50% mix.
Right. So, just wanted to know, how well are you capitalized to open these stores then? Will you need to raise more funds to be able to do this?
So right now we are profitable, operationally profitable. So we don't see any need to raise more funds, at least in the next 3 years. So until we reach that 80 store mark, I think we are well capitalized right now.
So well capitalized.